Hey, fellow traders. What I've got going on is a little bit of playing around, testing, and I've actually come up with a pretty simple idea for a 15-minute strategy based on a few different things that I've seen over the past. If this is your first video, welcome to the channel. Make sure you subscribe and follow along because I'm going to be releasing videos on a regular basis to cover more things on discretionary trading and different things that I find and just various different market teachings. I don't want to really sell a course or anything like that, so I'm just going to put everything out there that I know, and hopefully I can help a few people become profitable as well. For those of you coming back to the channel, welcome back. And what I've got going on is I'm going to go ahead and just jump right into it. I've already loaded up the Forex Tester 6, named the strategy the 15-minute simple step strategy, and it's forward only testing, so I can't go backwards. Got a $100 account, so I figured while I'm kind of refining this strategy a little bit, we could kind of do it together. And I also wanted to add another layer of a little bit of a challenge to see if we can grow our $100 account using the risk model that I have been using with the hybrid hedging and so on and so forth, and what I'm also using in my current challenge. But right now, what I've got pulled up is I've got the commissions and swaps and set up for the Euro USD, and this one's going to apply when we open the commission for the $4 commission. This is what I'm using for the challenge account. Right now, the swaps are typed in just as they're shown under the properties in your MT4 or MT5. If you have to go to your broker's page to find that and they show it in dollars, just type the dollar amount there. It will work out to be the same price. So that will take care of all the costs to make sure they're accounted for. And on this one here, I'm going to use a $500 500 to 1 leverage. That's another thing set up for the challenge. I'm going to be checking this out with the 50 to 1 leverage, but it's still pretty much going to work about the same. I've kind of already went ahead and set up our risk calculator. If you don't have that, make sure you check out my last video. 1 second here. I'll be sure to leave a little tag for that video. It's going to be, let me pull it up. Where is it? Probably, I'll double check that video, but I'll leave that video linked somewhere on the video here. Get that out of the way for a second. Now, right now, I've already set the calculator up to do the same thing. Now, I know I've had a few questions about risk management when it comes to actually, matter of fact, I'll leave a link for the calculator below this video. That'll work out the easiest, but make sure you check out the steps to profitability and a few of the other videos because I know they cover some good things about risk management primarily. But basically, when it comes to the $100 accounts, or basically anything under $300 accounts, it's really difficult to kind of justify your risk as a percentage, because that right there with the 10 cents per pip at a 0.01, that would basically leave us with 1% risk, but only a 10 pip stop, and we may need a little bit more than that. So far, I'm looking at an average stop of about 14 to 16 on what I'm working with, and I'm working on the 15-minute chart for this strategy. But what I'm going to basically do is I've already set out the next trade, and I'm going to use between about $2 to $3 of risk. So this is what it's going to look like as far as the risk profile and the risk system that I've come up with to try to compound up and make the wins back. Now, this is kind of not really set in stone. I've been seeing a lot of 80 to 90 pip targets. Basically, I don't really set targets with this strategy. I just kind of use a trailing stop and a little bit of discretion on closing some of it. And it's most of the basic discretion ideas that have already been covered in the first video on lessons in discretion, and I'm going to use a little bit of what I'm going to cover in the second video. I'm going to get that recorded here very soon, but I wanted to go ahead and get this put up. But that's what we're looking at for a risk profile, and I'm typically going to be looking at something like this for the first trade. I'll just use a 25 for the average target. I know a lot of times if you're looking to target previous highs or lows or something like that, you may wind up somewhere in a 20 pip to 30 pip range on the Euro USD. But this is our overall trade of what we're going to be looking at for our first entry. So I'm going to go ahead and close this part out, and we'll go ahead and get to the actual strategy part. So one thing I've noticed, it happens quite often, and we can actually go ahead and just start right here. So if you use the close of the candles, you're going to look at where you have support and where you have resistance, and you're only going to be looking at the most recent, kind of like what I talked about in the first discretionary video. So we would consider that right there, where we have the pin bar, these couple of opens and closes right here in this little area. I would consider that a short-term support. This would be the previous market high. So right now we have the market structure for this here was starting to turn upwards, but now it broke below that and started coming back up. And basically what you're going to be doing is you're just going to simply look for something in this range. You're going to look to just open a simple position right here on this support level that turned to resistance. You're going to put your stop just above the opposite side support or resistance. And there's really no target on this, because what you're going to do is you're going to allow this basic pattern to form again, because here's the support, broke, turned to resistance, pushed down. Now we've got kind of a level there. It touched it, pushed back down. It didn't quite reach it there, so you may have missed an entry unless you wanted to go on the break, but then you would have to basically be careful and know that you're going to be coming back again. But then same thing here, kind of got close. It didn't really fully get there, but it got pretty close. So that's where your discretion would come into play. But if you were running a stop loss on this trade because it was open, you would basically, every time it would come back and touched and then close back below, you would move your stop loss each time above that area. So now once it takes out that low, you would move your stop to that, and then you could do the same thing here and let it come back, or you could choose to use discretion to close it somewhere around in here. But you could also do the same thing and come back, made the new swing high, the lower high, and then you could have went and waited for that there, or you could have just went ahead and closed everything out at some point in this area. But now you're looking at about roughly a 17 pip stop. And if you would have closed it anywhere in here, you're looking at 60, 70, 80, 90 points of gain if you would have even held that open. But typically I like to run my stop loss right above that next swing and just choose to either close it out with discretion or choose to close it out once it crosses another line. Now, one thing about this that I've noticed with the stop too, we're going to do a little bit of this in the example, but we have something there where it goes and respects that high and comes back down. Same thing here, respects the high, comes back down, but then here it starts to kind of violate that high. Once it starts to violate that support that we previously had, that we were using, that's when you want to start considering to look for trades in the opposite direction. So now we'll start looking on the opposite side. So right here we have a top side support level. Price comes back into it and then starts to take out the highs. But then once it doesn't take out the highs, it starts to take out that low, that little support level. That's when you start looking again. So every time it takes out the opposite side support level where your stop would be on the opposite side of, that's when you start to flip your bias to look the other way. You really don't have to look overall at the time frame for directions too much. You can mostly kind of stick to the 15-minute chart This does kind of work on a lower time frame of the 5. You could also, but you will wind up with smaller trades in that area. It could also help you with a little bit better refinement of the stop loss. So, like if you were looking at this area here, where you notice if you went down to the 5, you could have actually moved your stop here. And once it got taken out, then you would have closed it and you would have ended up with about a 71 pip win. So that's about a 1 to 7 R trade. So for something like that, you would be about in that range right there. And then once it goes and moves down, let me see if we can get this in the right spot. There we go. So that's looking at a 4.59. Where did we have that before? 16. Okay, so not 10 and 16. So sorry, not 1 to 7, but 4.5, 4.5, 4.6 to 1. So pretty decent risk to reward on that. So that's kind of the basis for the strategy of what I'm looking at. And then, of course, you see where we make this larger move here. Let me back it back up. All right, where we make this larger move here. So we had a downtrend. We were making that step, but then it started to break back above. So we had a kind of a clearer level here, kind of looking for something that looks flat to be judged as a level of support and resistance. And then as you move down, once that clear level gets violated, so it may have been here you got violated, and now you're looking for, once the price broke out here, you would basically you would have had a limit order for price to come back, retest, and then have your stop opposite. You could even have it a couple pips outside of it, and then you could have also caught where it came back in and gone back up. So that's going to give you some really tight entries as well. That was pre-news, so you could also have to worry about spread in that situation. We had quite a bit of high impact news going on, so there could have been a high spread or some slippage or something. You may have not have gotten that trade being that tight. You may want to consider opening up a stop, make it a little bit larger during news times, but and as far as looking back, it works. So that's basically what I've been looking at playing with. So we're going to try this out in some forward testing, and we'll work on things a little bit and see where it goes. So I'm going to stay mostly on the 15. It tends to work out best. I also like to work with the hourly for the overall higher time frame. Right now, it looks like we're getting a change of structure, change of direction. We had a long-term downtrend. It tried to break above and then dip back below, and now we're pushing back up again. And we've also got our deceleration. It lines up on this level back here. Oftentimes, when I'm trading off the hourly chart, I'll look back to the most recent level if it has one. But you notice it also happens, this step pattern happens quite a bit on the hourly, and even though you may not get very many entries on the hourly. So that's why I kind of moved down into the 15 and even the 5 sometimes if you're looking, but you also have to expect that you're going to get some smaller trades. So let's go ahead and get into some trading. It looks like we've already had a major push. We've got a little bit, if you're looking at supply and demand, we've got a little bit of an order block. Strong push, so that's a wide gap. We could still see price coming down if we're looking at this at discretion. And trying to trade what you see, one of the biggest things about discretion is kind of experience. When I'm looking at the Euro USD, which is the one we're going to trade, this one does kind of tend to range for quite a while before it does change direction. So if you see, but one other thing to note: the longer it ranges, the bigger the move, and the once it finally does break free and start moving, the bigger that move will be. So right now, what I'm looking at, if I was to analyze this over time, I would start to notice this as a reversal. I'd start to see this as buyers being in the market, loading into the market, because these highs are staying up. We've got this little dip here and then a strong push out, come back, and now we're kind of lining up on this same little area and level here. So that would, with that level being higher than the lowest low activity and most of the price being up there, I would kind of read that as a reversal to the upside. But we'll trade this and see where it goes. Alright, so we've got a clean statistic chart, $100 in equity. We're using a floating spread, and we'll go ahead and get the day started and see what we see. So we'll let price move just a little bit. So now we're starting to get that break to the downside. I'm going to be looking at basically sort of about here, and I'll use that as our actual support and resistance zone. And you could even say that it's already kind of done something like that, where, and we'll kind of go with something a little more common, where it's already done that, where it's already touched in here and pushed off. So now we'll go to the next level. I would actually probably use that area right there in this case, and we'll say about right there. And we'll see if price does come back. So what we'll do is we'll do a sell stop, or a sell limit, sorry. And we're going to use our first planned size of a 0.01. We're going to place the limit there. We'll place our stop just above, and then no target. We're going to trail our target if we happen to get the entry. Okay, so coming back. There we go, sailed in, and no, we did not get that. So basically what we could have done though in this case is notice this ahead of time, something I kind of get lazy with in testing. But we noticed that it made a pullback and then started to go again, but didn't break that high. So that would kind of give us a new range to work with on our support and resistance, and now it broke back through. So I didn't quite catch that, just kind of rushing through, waiting for the order. But that came in, tested the top, went back up, and continued. Now, if the price crosses this area down here, then we'll look for a short again. Otherwise, we could be looking at possibly going long here, and we could even take a very tight size for here and just do a market buy. So we have basically about a 5 pip stop. Didn't get that either, so it did break. So now we've got a new range to work with. Kind of did break out already, and it looks like it left without us. But now we've come down into our demand zone, so we could actually start looking now to take a long. Go with about a 15 and see if we get a break out of that. No, it dipped below. So we'll go back to our strategy. There we go. It is above. We'll go to a 0.03. Just like we planned. Use a smaller stop and go ahead and buy. See if it breaks out. We're at end of day. So it is starting to break up. There we go. And then we could go ahead and move our stop up just a little bit. And now it's already broken above again. So we see here we had our little little range there. It got violated a little bit, but we could still say that it went back in and held. Now we got that for the new level. It's closed above, is coming back to retest. It did not cross, so we're still good. We can start leaving. So now we're already in profit, and we can start trailing up a little bit. Now we've got our new area. Starting to get more steps. The more common the close, the better off it's probably going to be. It's probably a good idea though to keep your stop just below the lowest low. And now it looks like we're starting to get a little bit of a change of direction, but we can leave it just in case, and we were correct. So there goes the entry short here. So we have our top, and we have our nearest support. And we notice how it started using that, pushing away, tap back into it, and come back. So we've also got our supply zone, and we didn't quite break out of that. It's been kind of channeling up for a little bit, so we could maybe even think that it is going to go short, because looking overall, we've got a fairly clear level here between all these areas. So maybe not, because now what we're looking at, we're breaking back into that. So now we have this level here. Yep, so starting to break into it, and we're getting a little bit of tap, and it's going up. And now we're back at the top, respecting up above here. I'm going to go ahead and take a buy. We haven't quite gained all of our capital back, so I will basically set smaller stop about there, 13.8. We'll buy that at a 0.03, and we'll see if we can catch this going up. And might not get that. We'll see. No, so we had another loss there, but now we've got going short. So I'll use the same size, 0.03. We'll move that up to 0.04. We'll see if we can take this back into the demand zone. Nope, it broke again. So we'll try the buy. Use a little bit smaller stop. There we go. There we go. So we have a 4-pip stop. Now we can start taking it up to see if we're going to get a little bit more back than what we started with. And we'll drag that up to each time it breaks out and breaks above a high, we'll go to that nearest low. And now we're getting a little bit of volatility. But we've already brought the account up $3.81, and we're on day 2. Or we processed 2 days, so we're on the 3rd day. So right now we have that. Let's see if we can do a pending order. Right, I'll put it right there, and then I'll do a stop loss here. And we will do a buy limit. Do this with a 0.02. We're up ahead a little bit. We'll see if we catch a winning streak. It does look like things are going to go up. So we're in and we're back out. So now it looks like we're starting to get a little bit of a roll over on the top. And now we're underneath this support level here. So that would be our next little area to look at. I'm going to go ahead and do a market order. We'll be selling, let's go about 17. Sell this down and see what we get into. There we go. Very nice push out. And I'll go behind that candle there. I think I'm going to go ahead and close that out. So we'll take that off the table. And now what we're looking at is we've got a little bit of a level here, straight across. So what I'm going to do is I'm going to take that into account. And we're going to use about a 15 pip stop loss. And we'll go with a 0.02. And we'll buy that. And see what we can get to here. So we're starting to get the reverse and the push. We've got price on top of that level. So now we can almost completely eliminate that risk. I'll put it right below that candle there. Now we've got the break above. So I will move it into the break even. And yeah, I didn't quite get that there. So now, there we go. We'll try to look to some of the most recent levels when we're taking the orders. The main reason you want to do that is because it'll give you a much tighter stop loss. And it'll give you a little bit more room to work as well. Sometimes if you're looking to go and close, like if it's going wrong but doesn't tap you out, but it does start to show that it might turn back the other way, you can close out 3 or 4 pips in loss instead of taking the whole 14, 15 pips of loss. So that'll save you in the long run as well. So it doesn't look like we're getting that. So in this case, I'm going to close this position. We're getting our new support here, and price has broken above it and starting to push up and tap into it. I'm going to go ahead and jump in, and we will grab about a 15 pip stop loss. Nope, did not get that at all, so I should have left that alone. Now we're back below this support, so I'm going to go ahead and take a market order. I'm going to bump this up to a 0.03 because we've lost a couple of times. Is about a 15 pip stop again. And there we go, getting a little bit in our direction. New step made. And I'll take trade into profit. We've got it again. And looks like we might be turning around a little bit. And we're into day. So it's slowed down, but now we've got the break below. So I'll go ahead and take another short again. I'll bump this back down to a 0.02. And place our stop at about 8.5. Sell it down. Getting another step made. So we're in beyond break even already. I might go ahead and close that out. So just in a little over a week, six trading days, we brought that account up $17.32. And that's all I'm basically doing and playing with, is just every time it makes a step, I take the entry in the direction of the step and move the stop loss at each step on the opposite side of what looks to be the most obvious. And I'm doing this on the 15-minute chart. And if we take a look at this now, so we are starting to break through this order block. We've already broken through it and pierced through it once. It's very possible this could actually go back up. But we have also got that pin bar that's already been taken out. So that is usually a sign that the buying power there is not quite ready to go. So we basically have this step area here. We've already broken back above this little area, because you notice here we have a common close, so that would be considered an area. If let's see, far forward just a little bit more. So price tapped into it almost a little bit. So I'm gonna wait and see. Nope. All right. This is actually a good example to show. This is what I call usually a negative x plus x equals 0. So that basically means it doesn't count. I wouldn't even look at that. I would completely ignore those two candles. But now we did have the break below and push above. It does look like that demand zone is actually coming into play. So I'm going to risk about $4 on this. It's a 0.02. I'm going to go ahead and buy. We'll see where we end up. Let's see if we come back to these previous highs. Alright, tapping in. Coming back. No, did not get it. So we could have trailed that stop up, and once it broke below here, we could have actually secured a few points. Plus, we also have, we could say that's a level there, but it's kind of common, but not so much. But it did start to make that into a level. So you could have also just closed it out there and then went short. But I was counting on that block to hold. So now basically what I'm going to do is just wait for a pullback or any kind of indication of a level. So let's see here. All right, we've gotten back into this level. So now we'll consider this level here. Market order. Put this on the opposite side at about 12 and sell it down. See if we get anything good out of it. So now we can immediately go beyond break even. A step gets made. And do we get the rest of it? No, not much. But now we're starting to push back up. We're starting to see this little bit of a curve here, so I'm going to go ahead and take it long. We'll use about a 13. I'll bump this up 1, 2 just because we lost that couple of dollars. And then we'll see where we go from there. So we've got our steps getting made. I'm going to leave the risk alone because it didn't really go anywhere yet. Now we're starting to go somewhere. We've got this little micro level here. It broke out, touched back in, and starting to push up. So I'll go ahead and take almost all of the risk out of the trade. Now we're starting to get a little bit more of a respect out of the step. I'll go to this one here for that wick low. See if we get another step made. Probably not. No. So we did make that little bit of money back, but now we're starting to get that doji pen bar. We're breaking also through this area and level here. So let's wait for a little bit of a pullback. We got a dip in that level. So I'm just going to buy it based on that. 14 pip stop. Nope, didn't get it. So I'm going to wait, see what we're going to do. Chopping around in that level. Probably going to go back to the wick. And we could have actually taken a short based off of that. We could have also taken a short there. Now it looks like it's starting to come back. I'll take a very tiny stop on this trade here because I'm going to view this little area here as kind of a support resistance. That as a kind of a trying to break out. So we're going to take a very small, about a 6 pip stop. That was the end of the day. That's another thing I don't pay attention to much is time. I do tend to be awake quite a bit. So we get in our step. So that would have been the entry. And we're getting a new step. We'll go risk free. Get a good breakout. New step to make. And carry it on out. And we could have actually targeted that level. So now we're going short again. And we'll bump this back down to a 0.02 because we've come up substantially. We're up $21.11 in only 8 days. Let's see what we're going to do here. Going to sell, I use a 13 pip stop loss. And down we go. Steps are being made. I'm going to stay above the wick. And it respected and did not. Now we've come back. We've got our level here. We've got another level here. So what I'm going to do is take a market order. We will use a 13 pip stop and see if we get that. No. So we're starting to change up. Probably should have closed a little bit early. So let's see what we're getting into here. Got a downtrend overall, so we're probably looking to go short there. We'll use the 14 on that for an arbitrary. And now we've got the break, so I will actually bring it there. New low. And I'm going to take it there because it is starting to slow down. So all of that momentum is starting to break. We're getting a little bit of a change in the volatility, but now we're up 22.49. We've also got this level here, so I'm going to take a very tight buy trade. 5 pips. I'll bump this up because we have such a small risk. And let's see where we do here. So we're getting that double bottom, big push out. Go to the bottom of that candle, didn't get it. So we're starting to come back, a little slow pattern. And I will take that very same order again. Very tiny risk. We're looking at about 6.5 this time. And we got the breakout. Starting to tap the top. There's our new level. There's our new shelf. There would have been another entry if you were not in already, but now we're getting some turnarounds, and now we're up to 138 in 9 days. So that is actually quite a very good strategy. It's actually hitting about 54% of the time in this part. And probability of loss 46%, reliability of 11, restoration 354. And we're using some pretty small sizes. We've already brought the account up 38%. That's just a $100 account. So I think that's actually a pretty decent strategy. It's pretty simple to follow, pretty simple rules. Just looking for the support resistance. It breaks one or the other. Place an order on that with a stop on the opposite side, and then just trail it up. So this is the results so far of the trades we've taken. Looks like we've taken, get all of them in there. That's 24 trades. So I've made quite a significant gain on the account in only 9 days. So that's just something I stumbled across. I kind of noticed after a while. So even without using too many markups, too much technical analysis, we're not looking at, I didn't look at the hourly chart, anything like that. I kind of looked at it at start, but it wasn't really much to do. And that it's probably something to practice, but looks to be pretty viable. So right there would be another buy. I'll just go ahead and do this anyway, just to buy. As I'm wrapping up the video, we'll do a final trade. We'll see if we catch something pretty good with a 15 pip stop. Nope, didn't get that. But that's the basic idea. So now we go short again. Take the 14 on that one. Close of the day with a downtrend. Nope, should have closed that out. All right. Slow down with the upward market. Try this again. Do a 0.03. And buy. Nope, didn't get that one either. But we had this level here, so that's probably why that went down. Now we've got the violation. Now we're getting some direction. Not really. So sometimes you got to watch out for the choppiness. I'm going to take another buy here. Use the 13. Is it going to step up and go? Making a little bit of steps and then starting to turn downwards again a little bit. Didn't do much at all that day. So that wasn't a very good trading day. Breaking out. Chopping around. There we go. A little bit of a push. And starting to get that going there. And there we go. So we brought that back up anyway. So 135.26, pretty close to where we were, 50-50. So it gives a pretty good little hit right there. But I'm going to go ahead and wrap things up before I make this video too long. Just practice around, play around. You could also try to check this out on the 5-minute. Another thing you could do is look for the entries off of the 15-minute and then use the 5-minute for your trailing stop. Because, see, in that case there, we could have used the same idea and seen that that was starting to form a level here and here, and as it was breaking down, could have actually tried to close it and flip direction there to go short. So you see this set up so frequently, so often, and in 13 days we took 28 trades. So I mean, we're looking at 2 to 3 trades a day sometimes. So that's going to give you a lot of opportunities, quite a substantial difference in the profit to loss, so it is going to return quite quickly, I would suspect, over time with a little bit of patience, and just waiting for that one setup. And you could probably just repeat that one setup over and over and over and over and over again. That's basically what I've been doing for the last 3 to 4 hours, and I've taken one account up 40%. That was a $10,000 account using just the 1% risk, and that's what I did previous before I made the video. So I'll wrap this up, but I'll catch you on the next video. The next one coming will be the risk discretionary trading part 2 is the one I need to be working on. But I just wanted to drop this little golden nugget on the channel and let you guys practice it and play with it over the weekend and see if you can get some good results with it yourself. I'm using the Euro USD, but it'll probably work on the CAD, the Aussie, quite a few different pairs. This is a pretty simple and basic setup, just using basic, most recent support and resistance. The most recent, that's it. And it could be a very short range or a substantial range like what we have in here. Have a little bit of a difference between those ranges, but there was a support there. It did not violate with that high and kept going down. So that's the whole idea behind the strategy. Pretty simple, but give it a try. See what you come up with. Catch you later.